Hi, good morning. So I welcome you to this day one of our CA final IDT class. And today we are going to start with the first part of our syllabus, that is goods and service tax. So now, what is this goods and service tax? What was the scenario before that we are going to first study? So if you remember, maybe you might be vaguely remembering that before GST came into existence. So GST came into existence on first, or it was levied. Levied means we started charging GST from 1st July 2017. Okay, as and when I write, you also write in a notebook. So you keep one notebook with you, and whatever I write on the board, you also try to write down so that later on it will be useful for your revision. Okay. So let's start. So GST was levied from 1st July 2017. So entire history of GST we are going to study in this chapter. That what are the different things happened, what were the different historical events, all we are going to study. So now, uh, what was the position prior to 1st July 2017? Prior to 2017, it was all khichdi, all combinations. Some taxes, for some transactions the taxes were levied on, or for some transaction there were multiple taxes. Like for example, when I was purchasing goods, I had to pay two taxes. Either I had to pay excise duty, uh, plus I had to pay either CST, that is central sales tax, or VAT. So two taxes were required to be paid. Then for services I was required to pay service tax. So there were separate taxes for goods and services. Then for alcoholic liquor, there was also this tax payable, but alcoholic liquor is not yet into GST. That also we are going to understand that why it was not yet under GST still. Why there were multiple taxes? Because now in India we have a federal structure. There are two types of governments. I'm not saying only two governments. There are two types of governments in India. First is central government, which is which uh, which covers, or which has jurisdiction over entire country, and there are state governments. So there are some powers given to central government that they can collect tax on that. There are some matters on which state government can collect. So earlier, some taxes were collected only by central government, some taxes were collected only by state government. Like for example, central excise duty was collected by state government, state excise duty was collected by state government. Then VAT CST was also a revenue of state government. So now both the governments had their own revenue. See, government also requires money. They want to undertake different activities, like they had to pay salary to their employees. You have different government employees. Then they have to do infrastructure projects like building highways, roads. So government also requires money for running the country, for state government running the state. So that is, tax is one of the major revenue. Okay, so there were multiple taxes, and all these taxes were indirect taxes. So what is indirect tax and direct tax? Direct tax will be recovered from me. For example, if it is my income, then in that case I have to pay from my own pocket. And if it is indirect tax, means what? I will be recovering from someone and paying. So prior to GST, what I was doing, if I was selling you goods, I would charge two taxes: excise duty or and VAT or CST. Two taxes I will recover from you and pay to government. That is indirect tax. If I was providing you service, then I would have charged service tax. So service tax was also revenue of central government. So both the governments were saying that yes, we are having our respective revenues. Again, I hope you are aware of this concept called as input tax credit. Now what is input tax credit? I'll explain with a simple example. Let's say there is Mr. A who is selling goods or supplying service to Mr. B. So A is called as supplier and B is the recipient. Or in simple terms, we can say that A is a seller and B is a buyer. Okay, as simple as that. So When A is supplying goods to B or service to B, he will charge tax. So that tax which is charged by A, he will collect from B. So B will pay and A will pay to government. So it is indirect tax. A is not paying from his pocket. He is recovering from B and paying to government. This is indirect tax because it is there is no levy. There is no A is not charging from paying that from his own pocket. He is collecting and paying. So that's why it is an indirect tax. So earlier and now also GST is also one of the indirect taxes. So now also GST is collected from the buyer and paid. So here Mr. A has not paid from his pocket. So who has paid? Mr. B has paid from his pocket. So that tax is considered to be input tax for him. See, for A it is output. If I am selling to you, it is output for me and input for you. Let's say you are into manufacturing, you are manufacturing, let's say mobile phones, and I sell you batteries, mobile battery. It is output for me because it is my sale, that is output. It is input for you. Ultimately, who is paying tax on that? You are paying tax on that. So it is input tax for B, and input tax credit will be allowed to Mr. B. This was prior to GST also and now also. So earlier it was called with a different name and won't tell you what was the name because we are required to remember what is the name currently. But logic is same. So this input tax credit is allowed to B. Means what? B is also selling. Now B, let's say, we'll take different example. I am into training. I am training. I'm a corporate trainer. You are a company which is selling goods. You invite me for training your employees. So I charge you GST. So that GST is or that tax is output tax for me and input tax for you. Okay, I hope you are understanding it. Input tax for you. Now, when you are selling your goods, you are also a manufacturer. So that time you will charge tax. If you charge tax 1 lakh, from that, whatever tax you have paid to me, that will be input tax. Okay, so just the basic thing we are in this chapter only we are going to discuss in depth about this. Don't worry. So input tax means what? Tax on purchases. That's it. So that input tax credit is allowed to the buyer. Now again going back to the pre-GST era, what used to happen? It used to happen that if service tax is there, so if I am providing you service, so I would be charging service tax. When if you are a manufacturer, then you are not going to charge service tax. You are going to charge excise duty and VAT. So this service tax credit was not allowed fully to you. It was not allowed against VAT. So again there was an so you just remember there was issue of input tax credit. So since there were multiple taxes, credit of one tax against another was not allowed. Again there were some transactions where there was an ambiguity. Ambiguity means confusion whether it is goods or it is service. Like for example, restaurant. If I would have gone into restaurant before 1st July, then in the restaurants what we do? We get goods also. That food is goods, and we get service also. That whatever waiter is providing us, the manager comes and says, okay, how is this? How is the food and all? That is a service. Waiter comes and gives you that food. Then the cleaning person comes and cleans the table. This is all service. So before GST, there were multiple rulings, multiple high court rulings, and due to that it was held that on the goods component some tax was payable, VAT was payable, and on the service component service tax was payable. So there were multiple taxes on the same transaction. So because there were multiple taxes, again in case of software also, whether software was goods or software was service, that was also confusion. So since there were so many taxes and so many confusion, so government thought that we will bring them under one roof, and that's why it is called as GST is called, if you remember, one nation one tax. Why is it called one nation one tax? Does that mean that there is only one tax rate under GST? No, tax rates can be different. Then how you will justify this one nation one tax? I'll tell you. So under earlier provisions, VAT in Assam was different from VAT in Maharashtra. So a person who is selling a particular product, like say mobile phone, if he sells in Assam, then maybe it was 5%. If he sells in Maharashtra, it was 10%. Then obviously businesses started doing tax planning practices in such a way that they would set up the units in those states where the VAT rate was low. So for the same transaction, for the same product, for the same service, not service, for the same product, uh, there were multiple tax rates in different states. But now under GST, even if you sell a product in Assam or Maharashtra, tax rate, effectively total tax whatever you are going to pay will remain same. Maybe the type of tax will change. There are multiple taxes that also we'll study now. CGST, HGST. So type of tax will change, but total tax under GST will remain same. The total amount. That's why it is called as one nation, one tax. That does not mean that there is only one rate. If for a particular product or a service, whatever rate is there, that will apply throughout India. Means wherever you are in India, you are selling goods or services, on that same rate will apply. So there are no geographical differences under GST. So I hope you are clear that there were so many problems prior to GST. Now let's check up what is given here. Goods and service tax. A comprehensive tax structure covering both goods and services. So earlier on goods there were different taxes, on services there were different taxes. Some taxes were collected only by state government, some were collected by only central government. Now imagine you are state government, I am central government. I had power to collect 5 taxes. You had power to collect 4 taxes, for example. Means exclusively the taxes are with you, some taxes are with me, revenue is with me. Now see the next line. There is simultaneous introduction of GST at both central and state levels. Means what? Now the transaction, whatever GST you pay, half of that will go to central government and half will go to the state government. Now imagine there were total, let's say there are 9 transactions overall. This is a simple hypothetical example. Hypothetical means what? Maybe in actual practice the transaction will be different. But let's say there are only 9 transactions on which taxes were there prior to GST, and now also there are 9 taxes. Out of that, tax on 5 were with me. Central government will reserve, means that tax will remain with me. Tax on 4 will remain with you. So now it is given that both will charge. Means on that 5 transactions, I was getting full tax. Half of that I have to share with you. On 4 transactions which were exclusively with you, you have to share half with me. So again, there was an issue. So state government saying no, 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 we are not going to come. So this GST was implemented in 2017, where NDA government, Prime Minister was Mr. Modi, Narendra Modi. So he was very keen that GST should be implemented because of the benefits it will get. Obviously there were and there are lot of deficiencies in this. The system has to be corrected, but obviously multiple taxes are not there, so maybe in future the GST will be simplified. We hope so. So the idea was to have a simplified tax structure, because earlier if there were different taxes, different acts will apply, different returns will be there. So if I'm providing goods and service also, then I have to file returns under VAT also, excise also, service tax also. Now it comes under one banner, that is, or one head, which is GST. So they are simplifying it. So the NDA government was very keen to get, because they were ready to, central government was ready that will give a half revenue. But state government were saying no, no, our half revenue will be shared by central government. Like central government is sharing their half revenue with states. States will also have to share. So central government said no, theek hai, don't worry. What we will do, for a few years, whatever revenue loss you are going to incur, we will calculate that this much is the revenue loss. Means because you are sharing half with us, you will have some loss. That loss we will compensate. That we will give compensation, and that compensation, there is a formula for that. That formula is not there in our syllabus. But from where the government will give compensation? Government is not having additional money. So it will collect tax which is called as compensation cess. Okay, this also we'll study. So there is a cess. Cess means tax for a specific purpose. So it is collected from suppliers only, and it is collected and given to the state governments to compensate their loss. Why they are incurring loss? Because they are sharing half of the revenue with central government. So that loss central government will pay to state government. From where? Not from central government's tijori or pockets. It will be collected from us on only few products like pan masala and all, and it will be paid to the state governments. Now there are two important products. First is alcohol, alcoholic liquor for human consumption, and second is petrol. So alcohol remains the revenue of state government. On that, state excise was levied, and petrol, on that, central excise is also levied and VAT is also levied, which is the revenue of state government. So state excise and VAT. So the entire tax on alcoholic liquor for human consumption goes to state government. In case of petrol, some part of the tax goes to central government, some part of the tax goes to the state government. Now states were not ready. We will not charge tax on, we will not allow GST on alcohol. Why? Because imagine now you are state, I am center. You are state, you are getting full revenue from alcoholic liquor for human consumption. So why will state share the half of them? And again, the compensation will be huge. If half is shared, then there will be a huge compensation which has to be paid to the state governments. So state government said no, we won't agree that on alcohol GST won't be there. We will continue with this only. We want the entire revenue. So for the time being, alcoholic liquor is not covered under GST. So if you go to any restaurant and you order food also and drinks also, you get two separate bills. One bill where food and service charges are there, on that there will be GST, and alcohol bill, liquor bill is separate, on that VAT is charged. If you observe next time we go, and if there is someone who is having liquor, you can observe that. So on alcoholic liquor for human consumption there is no GST, it is still pre-GST taxes. Petrol also. So central government said okay, why should we share our revenue? It should be two-way, na? Said state government is not giving up their revenue. So central government said okay, petrol also for the time being we won't charge GST. Whatever old taxes are there, that will be continued. Understood this? So this entire GST is a power play between two power centers, central government and state government. So on other provisions, like for example, you have paid our fees. So whatever fees you have paid, on that tax is to be charged, we will pay to government. Half of that tax will go to central government, half of that tax will go to the state government. Now GST is a consumption based tax. What does that mean? I'll explain by way of an example. There is Mr. C who sells goods to D. So C will collect tax from D and pay to government. Is it clear? So for C it is called as output tax, and for D it is input tax. D will get input tax credit. Now let's say Mr. C is based in Bihar and Mr. D is based in Telangana. Now Mr. C will charge some tax, GST. Which tax? That right now we have not studied, so just remember GST. So what is the flow? Let's say you are Mr. C, I am Mr. D. You have sold some goods to me. You will charge, let's say the tax rate is 18%. Goods sold are 1 lakh. 1 lakh plus 18,000. You will issue me an invoice. I will pay you 1 lakh 18,000. Out of that 1 lakh you will retain, you will keep with you, and 18,000 you will pay to government. Now C will pay to government. Which government will get that tax? Half of it will be paid by will be the revenue of central government. Balance half will be revenue of which government? Will it be Bihar government, that is the government of seller, or Telangana government? Now I told you that GST is a consumption tax, or a destination based tax. So where is the destination of goods? Where is the ultimate buyer located? So the buyer is located, sorry, in Telangana. So half of the revenue will go to Telangana, government. Whether I have to do this, whether I have to say that okay, you give half when you are paying the tax, will you say that no, half you give this, out of 18,000, 9,000 to central government, 9,000 to Telangana government? No, this will happen at the upper level. There is a company who is going to do this, GSTN, that also will study in this chapter, goods and service tax network. There is a section 8 company, so that company will do, you need not do anything. So ultimately the tax will go to which government? It will go to the consumption state, or government of destination. So that's why it is called as destination based tax. Got it? Okay, so let's go back. This is done. So I explained you that we have a dual GST, which means center and state will impose both will impose, and half of that will be the tax of central government, half will be of the state government. Which state government? State government of destination. It would integrate taxes on goods and services for the purpose of set off, relief, and will ensure that both the cascading effects of SENVAT and service tax are removed, and a continuous chain of set off from the original producer's point or service provider's point up to the retailer's level or consumer's level is established. In GST regime, the major taxes have been subsumed in ambit of GST. Now we studied, or I just read a word called as cascading effect. Now cascading effect, what does that mean? It means tax on tax. Okay, so now I'll explain you by way of one example. Earlier when I would sell you goods, I would be charging two taxes. Let's say I'm a manufacturer and I'm a seller also. So in that case, let's say the excise rate is 10% and VAT rate is also 10%, and sale value is 1000. So now on this sale value I would be first charging excise duty. So 10% of 1000 is 100, and again I would be charging VAT. VAT 10% of the total amount, and this will be the total price which I will be charging. So here I am charging tax on tax. So that is cascading effect. Then this has sold to someone. Maybe in some cases input tax credit was not allowed. So if this is sold to B, input tax credit was not allowed to B. So in that case he will charge tax. This will be the purchase price. Whatever is the total, that will be the purchase price. He will charge tax on, he will add his profit margin to it, and he will charge tax. Then that will become sale price for him and purchase price for the other. And like that, tax on tax on tax, that is called as cascading effect. So now I'll give you example. A to B. For A, what is the total sale price? 1210. 1210, and this will be the purchase price. Then he will add some 200 rupees profit. Maybe they are just traders. Traders means what? He's purchasing and he's selling to someone. So 200 rupees profit margin added, and this becomes 1410, and then he will add VAT of 141, 155. Now this 141, 141 consists of what? You have charge tax on 1410. 1410 is own profit plus purchase. So now in this case, this 1210 includes this tax also and this tax also. Means effectively in 141 you are charging tax on this 100 and 110 also. So like that, tax on tax is charged, that is called as cascading effect. So that was one of the major disadvantage of the pre-GST tax structure. Now under GST what happens? You get input tax credit. Input tax credit means what? The other person can reduce that from the tax payable. So that is not cost to the other person. I'll give you simple example. Let's say I am charging you 1000 plus 100, for example, means total you are paying 1100. If you are not getting input tax credit, means you are not getting any benefit out of that, that is your cost, which then to that you will add your profit margin and then you will charge tax on that. But if you are getting input tax credit, means what? That 100 will be reduced from your tax payable in future. Means total, let's say 1500 worth goods you are selling, so on that tax will be 150. From that 150 will reduce 100, means you are getting benefit out of it. So that 100 cost tax on purchase will not be considered as a cost of production or production cost. So just write down this line, I'll dictate. If input tax credit is available, if input tax credit is available, then the input tax will not form part of production cost. If it is not available, then input tax will form part of production cost. Okay, under GST what has happened? I'll just write. I hope you are copying everything. So let's say A to B and B to C, and we'll assume that GST rate is 10%. Actually there is no 10% rate, this is only hypothetical rate. I told you already example, or what is the word hypothetical means? It means general, for only understanding we are taking that rate. So let's say A sells to B goods of 1000 plus 10%, 1100. For B, ITC of 100 allowed. So here, when what would be the production cost for B to C? When B is selling to C, his cost would be only 1000, it won't be 1100. So cost 1000, then profit let's say 200, then 1200, then tax 120. So he will charge tax 120. So from C how much he will get? 1320. He will get 1320 from C. B will get from C 1320. Okay, but how much he will pay to government? Tax is 120 which he has collected. Now see from the point of view of Mr. B. Earlier he had paid 100 rupees to A. So it is like advance tax he has paid. It's not correct to call it advance tax, but just for understanding that 100 rupees he has paid to A. and now he has to pay 120. He has already paid 100 and he has got 120 from C. Imagine you are Mr. B. You have paid 100 to A. 100 rupees you have already paid. Total how much you have paid to A? 1100. Means 100 rupees tax you have paid to A. Out of which A has already paid 100 tax. How much you have collected from C? 1320. Okay, 1320 you have collected. Means out of that 120 you have to pay to government. But from your pocket you have already paid 100. Means how much net tax you have to pay? Net tax payable to government by B. 120 minus 100, that is 20. So only 20 rupees you have to pay. How much has gone from your pocket? Total 120 has gone. You have paid 100. So you have collected 120. Out of that 100 you have already paid when you have purchased goods from A, and 20 now you are paying to government. So this is the benefit of input tax credit. Got it? If credit was not allowed, then you would pay 100 rupees also to A, and whatever is the tax collected from C, that entire tax has to be paid. Double you have to pay. But due to input tax credit, this benefit will be allowed. So in this case, effectively, on how much value B has paid tax? If total tax net tax paid is 20, 20 divided by 10% means 200. He has paid tax on only 200. So see, the cost of or the sale price by A to B is 1000, means purchase price. Now we are thinking from B's point of view. Purchase price for B is 1000 and sale price is 1200. Means how much is his value addition? Value addition is only 200. So only on 200 tax is effectively charged. So are we going to charge tax on only 200? No. We'll charge tax on sale minus tax on purchase. That will be the net tax. This is a very simple example. As we move further, there will be complications, because tax rate on purchase and sale will change. So it won't be exactly like this, that net tax will be tax on only value addition. But assuming that tax on purchase and sale is same tax rate, you can say that there will be tax on only value addition. So this is the advantage of GST. What are 2-3 advantages here? First, input tax credit is allowed. Since input tax credit is allowed, the tax on purchase will not form part of the production cost. I hope you have written, I have dictated you that if ITC is allowed, then that tax on purchase will not form part of cost of production. So here in this case, we have taken cost only 1000. Cost of production or cost of purchase or cost of providing service, anything. So only 1000. It's not 1100. Then we have added profit and then tax is calculated. Second advantage is you are getting input tax due to input tax credit. This only net tax is paid. So effectively you are charging tax on only value addition. So this is the basic premise of GST. We are going to build it further. Yes, coming back. So I hope you have understood this cascading effect. Cascading effect means tax on tax. Okay, let me just check up my calculations. Okay. If you feel that I have made some calculation mistakes, please let me know, because I am in this class and I in the flow sometimes the calculation mistakes can be there. I have forgotten my calculator today, I'll get it tomorrow. If you find it out, just tell me in the comment box. Okay. In GST regime, major indirect taxes have been subsumed and in the ambit of GST. Subsumed means what? Absorbed. Means if there were not only 9 taxes or few taxes, there were multiple taxes which now have been replaced by GST. That also we'll study. Features of goods and service tax, tax on value addition. I told you. Continuous chain of credit means what? Continuous chain of credit. A to B, B to C, C to D. E is the ultimate consumer. So let's say A is the manufacturer of goods. Okay, so he is manufacturing goods, he is selling. Now if he is a huge manufacturing company, like for example company which is selling FMCG goods, fast moving consumer goods like your toothbrush, toothpaste, soaps. Let's say it is Hindustan Unilever Limited. I won't purchase from HUL directly. So it will first sell to wholesalers. Then wholesalers will sell to retailers or maybe distributors. Distributor will sell to retailer, means the retail shop, the shop where we purchase soaps and all, or it can be an e-retailer. Now due to lockdown, multiple waves of coronavirus, we are now used to sitting at home. This class also I'm taking sitting at home only, but interacting with students live. So this retailer, e-retailers, we know Amazon and a lot of them now, Big Basket, you can name any. So that is retailer or e-retailer and ultimate consumer. So in this case, A sells to B. So which of the transactions are in business? A to B is a business transaction because B is also into business. So this will be called as B to B, business to business transaction. So A will charge tax, B will get credit. Then B sells to C, both are into business. So this is also B to B transaction, business to business transaction. Then C is a distributor who is selling to D retailer, that is also business transaction. And D is a retailer who is selling to consumer. C is a E is a consumer, so it is B to C, that is business to consumer. So in which transactions input tax credit will be allowed? Only to B to B transactions. So whatever tax is charged by A to B, B will get the credit. Whatever charge is taxed by B to C, C will get credit. Whatever charge is taxed by C to D, D will get credit. Whatever tax D has charged to E, he won't get credit because he is an ultimate consumer. He is not into business of selling it further. Therefore, he won't get the credit. Now, the same person can become a consumer also and a businessman also. How? Let's say I am into the business of selling laptops. So when I purchase laptops, the purpose is to sell it further. So in that case, I will get the input tax credit. But I go to a shop or I go visit a website and I purchase an iPad that is for my own consumption, for my own use. There, even if I'm in the business, this is not a product which I'm going to use in the business. So now my role changes and I become a consumer. In that case, if it is for my personal use, then in that case, I'm not going to get the input tax credit. So ultimately, the ultimate consumer does not get input tax credit. So the tax revenue, whatever the tax revenue will be, or okay, I'll tell you further that which government will get the tax revenue, that we'll study further. Let's not jump right now. Okay, so continuous chain of credit. So till when the credit is passed on? The credit is passed on till D. After that, credit won't be allowed to E. Then yes, now there comes the point. Burden on the final consumer. So see, B, C, D are getting the input tax credit. Means what? Let's say tax charged by A to B is 100, 200, 250 and 300 is the tax charged. Now A is not having any input tax credit, but B will get input tax credit of 100 and B will pay only 100 to government. C will get input tax credit of 200 and C will pay only 50 to government. D will get input tax credit of, so this is for B, this is for C, this is for 250 and pay to government. So this is for D. How much input tax credit E will get? Nothing. But he has paid from his pocket 300. I'll explain once again. A has charged tax 100. B will get the credit. B has charged tax 200. C will get credit. C has charged tax 250. D will get credit. And so whatever, how much is the tax charged by D to E? 300. He will recover 300 from E. He will take input tax credit of 250, which is the tax on purchase, and net he will pay to government. But think from E's point of view now. E has paid 300 to D, but E is not getting any input tax credit. So ultimately the burden of the tax is on whom? 300. 300 is on the final consumer. Got it? Okay. So I'll explain. Should I explain once again? Yes. I'll explain once again. A has manufactured the goods and he is selling to B. He has charged 100. So A will pay 100 to government, assuming that, let's say, on raw material he has some input tax credit, that he will reduce and he will pay 100 to government. B will get input tax credit of 100. B is, how much is the output tax for B? It is 200. From that 200, input tax of 100 will be reduced and 100 will be paid by B to government. C again is into business. C has collected 250 from its buyer. So its buyer is D, and C has paid 200 to the on purchases. That will also be reduced, and C will pay only 50 to government. D has sold goods, and on that tax is 300, but tax on purchase is 250. So he will pay only 50 to government. And E is the ultimate consumer. He is not using it further for business. So that burden of 300 is on E. This 300 is paid. So now, how much is the net tax paid to government? First transaction 100 paid, second transaction 100 paid, third transaction 50, and fourth transaction 50. So 100 plus 100 plus 50 plus 50, that is 300. So 300 burden is on E. Ultimately it is paid by E, but government, it is receiving in parts. Got it? Due to this input tax credit chain. Once again I'll explain. So the burden of 300 is on E. Ultimately 300 rupees have been paid by E, but has that 300 rupees been deposited to government? Yes, it is deposited, not by D. Even if D has recovered 300 from E, D has not deposited 300. Then who has deposited? A has deposited 100, B has deposited 100, C and D have deposited 50 each. So the same amount is distributed over the entire chain. And why this happens? Because there is continuous chain of credit. Next point is no cascading effect. So I hope you are clear on this. Yes. Now I already explained you that before GST there were multiple taxes. Some taxes were collected by only central government. Some taxes were collected by only state government. Now for collecting taxes, for levying tax, levy means what? To charge tax. That particular transaction should be in the constitution. You know, our country follows constitution of India. So now to the constitution of India there are three lists. Union list, state list and concurrent list. In which case only union list and state list covers taxes. Concurrent list is security and other things. So union list means taxes imposed by central government. State list means taxes imposed by state government. I hope I am clear on this. So earlier there were taxes which were covered only in union list, like central excise, then CST. But CST was said that it was uh, collected by central government but retained by the state government. So we'll just kick out this CST from here, even if it was part of union list still. Okay, central excise, then service tax, then VAT was state list, then state excise. On alcoholic liquor there was state excise. So now in GST what has happened? Tax is to be collected by both the governments. So we'll take example of a service. Now before 1/7/2017, if I am providing you service and I am going to charge tax of 18,000, entire tax was to be given to central government. Means when I would file my GST returns or pay service tax, 100% will go to central government. But now after 1/7/2017, when GST is imposed, half has to go to central government and half is to go to state government. But is the state list allowing that for state government to collect that half of that tax? State list should allow. Then earlier central excise was to be collected only by central government. Now when I am selling you manufacturing goods and selling you, now I am charging GST, where half will go to state government, half will go to central government, whereas earlier 100% revenue would have gone to central government. So this services manufacturer was only in union list, so it has to be added in state list also. Similarly VAT, when I am selling, at that time I was charging VAT, 100% of that revenue went to state government. Now on that same transaction after 1/7/17, half has to go to central government, not only to state government. So there are provisions, or there were taxes which were only for central government, there were taxes only for state government. Now both the governments will be charging tax. As you know that you have to do anything in our country, we have to have that in our constitution. So constitution which was made at the after independence, it keeps on changing. Who can change the constitution? Is it High Court or Supreme Court? No, it's not High Court or Supreme Court, it is Parliament. So Parliament has to amend the constitution, and for that Constitution Amendment Act has to be passed. So by both houses of Parliament, Lok Sabha and Rajya Sabha. So in this case, constitutional amendment was required. Why it was required? Because a transaction, for example, this is a transaction service, and this is tax on that. Entire tax earlier would go to the central government. Now, which means this transaction was only specified in state union list. Now on the same transaction, okay, this is not exactly half, but you can visualize that this is half. Half will go to the half revenue will go to, or half tax will go to the central government, half tax will go to the state government. So this half going to state government is not allowed by the constitution, but we want to charge that tax. So for that we have to change the constitution. That's why Constitution Amendment Act was passed. Let's check up the constitutional amendment. The constitutional provisions had given separate powers for the center and states to impose taxes. I explained you this. The central government levied excise duty. Levied means what? Charged excise duty on all goods produced or manufactured in India. The state levied VAT once value-added tax once the goods were sold. Services were exclusively taxed by center. There were state-specific levies. State-specific means only for the state governments, like entry tax. You know, if you remember, there was one tax called as octroi. There was entry tax. So it has been substituted. Luxury tax. If you are kids that time, if you visit any hotel, if you maybe you might not have checked that. Maybe your parents might have checked that. Some hotels, especially in the which areas we can say, hill stations, they would charge this luxury tax. So that tax is no longer there, that is now under GST only. And we don't have a luxury tax separately under GST. Under the GST laws, CGST, SGST, IGST, it is subsumed. Then entertainment tax, lottery and betting tax, local taxes levied by Panchayat. So there were state specific levies. About entertainment tax I'll explain later, because there is a, we can say, a trick in that. With respect to goods imported from outside India, center levied basic custom duty and additional custom duty together with cess applicable. But please remember, customs is not subsumed under GST. If it was subsumed, then we would not have separate part in our syllabus. We have 25 marks customs and foreign trade policy. So it's still there. It is not subsumed. So there were, so what is the conclusion of this? There were different taxes. Some tax charged by central government, some charged by state government. So to bring them under one, a constitutional amendment was needed. Consequently, a constitutional amendment was needed to enable integration of central excise duty, including additional duties of customs, state VAT, CST, certain state-specific taxes and service tax levied by center into comprehensive goods and service tax. So all these taxes were brought under one umbrella of GST. That is called as subsumed. Means instead of charging service tax on services, now which tax is charged? Goods and service tax. Instead of charging on goods sold VAT and excise, now goods and service tax is charged. And for that purpose, constitutional 104 or 101 amendment or 101st amendment act 2016 was enacted on 8th September 2016. So this, which amendment number you have to remember, because we have MCQs. Sometimes in MCQ they'll ask constitutional 100th amendment act, 101st, 102nd or 103rd, like that. 2016 was enacted. It means prior to this amendment, almost 100 times the constitution was amended before this, and it was enacted on 8th September 2016. So now on the last page, I think just the history is given. See the important time limits. I will just go through that. France was the first country to introduce GST. So GST is not a first concept. Means we are not the first country to implement GST. Many countries have already implemented. So France was the first country, and around 160 countries have adopted GST. So maybe the models might be different, tax rates might be different, there can be different policies, but the logic remains same. In India, the idea of national GST was mooted by Kedar task force in 2004. So see, in 2017 it was implemented, but when was the idea started, or idea germinated? In 2004. So it took so much time, and obviously on paper that Kedar task force was formed on paper in 2004. Maybe the idea was in minds of our leaders even before that. The then Union Finance Minister Sri P. Chidambaram announced that GST would be introduced from 1/4/2010. So that time UPA was there. This Congress government was there, and P. Chidambaram was our finance minister. So he said that okay, in 2010 we will be done. From 1st April 2010 we are going to have GST. But it took 7 years. Maybe the opposition party that time, BJP was in opposition. Might be they have opposed, or maybe they have added some ideas, and due to that, and maybe, and earlier it used to happen that now this, see this whatever new amendments have to be done to the acts, or you want to introduce a new tax, for that you have to take permission of parliament, means Lok Sabha and Rajya Sabha. If you remember, prior to 2014, maybe you might not, or even I was not so much aware of politics that time, but you might ask your parents that the governments were coalition government. Like Congress won't have full majority. Congress would have some seats, and there will be some 7-8 parties who would come together, and then they will have their majority and they will pass the rules. So what used to happen that time? Anything, any law has to be passed, they have to take permission of each and every alliance partner. So again, if some partner says no, we won't allow that, otherwise we will take out support and the government will fall. So due to that, reforms would take time. Now what has happened after 2014? BJP or India is getting full 100 means clear majority. So in that case, more, if there is majority in Lok Sabha, and if they can adjust in Rajya Sabha, they can pass the bills like this, like very easily. So maybe in 2010 there was a coalition government. 2010 means UPA 2. The second time Congress government was there, so that time it was introduced, but again there was would be introduced. He just said, but ultimately in 2014, when NDA government, when Modi government came into power, they said that okay, now we will this Constitution 122nd Amendment bill was introduced, etc. Then Lok Sabha passed it. So immediately after, so maybe the BJP government knew that or the benefits of GST. So immediately in 2014, when the government was elected in May 2014, the elections were held and the new government was elected. Immediately on 19th December 2014, the in Parliament this bill was introduced. Lok Sabha passed it. So maybe into December means the winter session it was introduced. Then 6th May 2015, Lok Sabha passed the bill and Rajya Sabha on 3rd August 2016. Now, when the bill is passed by both, then in that case, it has to be given final. So, for any bill, like for example, every year this budget is presented. So that budget is presented in Lok Sabha. That won't go in Rajya Sabha. That is called as a money bill. But this bill has gone in Lok Sabha also. It is passed by Lok Sabha. Means majority of the Lok Sabha members have to vote in favor. Then it goes into Rajya Sabha. Rajya Sabha has a representative of political parties. Basically, Lok Sabha means the people who are elected, and Rajya Sabha means the people who are selected. So both the houses of parliament have given their more than 50% votes for that. Does that become final now? No. Again, that has to be passed by president. Means president has to sign it. But you know, in India, president is just an ornamental post. That person does not have any great powers. The powers are with the prime minister. So obviously, the president will sign it, and after it is signed by the president, the bill becomes act. So subsequent to ratification of bill by more than 550% of the states, Constitution 102nd Amendment, 122 or 122nd Amendment Bill 2014 received the assent of President on 8th September 2016 and became Constitution 101st Amendment Act 2016. This which paved way for introduction of GST. So see, once the in 2014 the government which came into power was majority government. It was not a coalition government. Bharatiya Janata Party had 100%, means pure majority that time. So there was no fear that if we adopt this, then one of the alliance partner will go and our government will fall. So immediately in 2016 this act was passed and it was implemented from 2017. And in 2016, what else happened? In during or after Diwali, demonetization happened. So in demonetization, the entire currency was or majority of the currency was wiped off. So it was a planned move, that parallel economy, whatever parallel system which was going on, it should collapse. Everything should come into the main system. Parallel system means that black money system. Obviously, it has not fully collapsed. It has again restarted. But the idea was that the black money which was floating will come into the system, and on that, once the black money comes into the system, then the transactions will be routed only through the main system, not through the parallel economy, which is the black economy. No, it will come into the system, and then after that GST will be charged. So on an average now, every month the GST collections, total GST collection of our country exceed more than 1 lakh crores. So during the pandemic, obviously it was a dip because of the lockdown, but on an average it is now exceeding 1 lakh crores. Then on 27th, so this was something political background. So I have to tell you all this because you should understand that how the bill is passed, then what are the different things. Finally, when the president signs, then in that case we can say that the bill becomes act. On 22nd March 2017, central GST legislations, that is CGST bill, IGST bill, UTGST bill and GST compensations to states bill were introduced in Lok Sabha. So first Constitutional Amendment Act was passed. Then these acts, under that Constitution was amended. Is the job over? No. Now under GST also there should be some acts. So there were 4 acts: CGST Act, IGST Act, UTGST, and GST compensation to states. So they were introduced in Lok Sabha. Simultaneously, for state governments also they will be having the state good SGST acts. It will be passed in the assemblies of their states, and Lok Sabha passed it. This was a money bill, so it was not required to be passed in Rajya Sabha. So Lok Sabha passed it in on 29th March 2017. President gave assent on 12th April 2017, and after the president's assent, president signed, it became act, and it was enactment of central acts is followed by enactment of state GST law. So after the central acts were passed, every state passed their acts. The state acts are similar to central acts. Then you say that why we are having separate state acts? Because half of the revenue will go to the state government. So state government should also have some tax, some act. Like Maharashtra government, the GST Act is also there. Every government GST Act is there. Are we required to study state-wise acts? No. What we are going to study, I'll tell you. And then government rolled out GST by 1st July 2017 by achieving consensus on all the issues. Still, since it is a tussle between state government and central government, sometimes central government says no, we want this, sometimes state government says we want this, then who takes the decisions? Will central government take? Will state government take? Both have to take, but there should be some forum where they take. For that, there is one place called as, or forum called as GST Council, where there are members of central government also and state government also. So GST Council meetings are held, and whatever decisions are there, that also we are going to study in this chapter only. What is GST Council? But the decisions which are impacting GST are taken by the GST Council, which has representatives of state government also and central government also. Let's go back now. Okay, now which taxes were subsumed under GST? I'll just have some water. Yes, let's start. Which taxes are subsumed? Subsumed means what? They are now part of GST. They have come under umbrella of GST, which means they are no longer charged. Central levies means these were earlier levied by, or they were charged by, central government. And state levies means they were charged by state government. Central levies to be subsumed: central excise duty and additional excise duty. So under Central Excise Act, certain excise duties were there, which are no longer part of the duty, or they are subsumed under GST. Service tax, I told you this. Then excise duty under Medicinal and Toilet Preparation Act. So Medicinal and Toilet Preparation Act means what? Now I told you that alcoholic liquor for human consumption is not subsumed under GST, which means on that state excise duty and VAT CST is already also still charged. But what I have told you, alcoholic liquor for human consumption, which means beer, whiskey, wine, rum, whatever you know, on that GST is not there. But for medicinal preparation you require alcohol. Like for example, the medicines which we have, allopathy. Why when I have a medicine, why I sleep? Because there is some content of alcohol in that, which makes me sleepy. Then toilet preparations means phenyl, phenyl which is used for cleaning. And you have different products which you are using it for cleaning toilet, that Domex and all. So that also has some alcohol. Alcohol is for cleaning. So on that there was excise duty under Medicinal and Toilet Preparation Act. So that is subsumed, which means on which alcohol only GST is not levied. Alcoholic liquor for human consumption. If it is alcohol for industrial consumption, it is subsumed. Means which means GST is payable. Then CVD and special CVD. This we are going to check up in customs. That earlier there was countervailing duty or additional duty which was equivalent to excise and VAT, which is not there, and instead of that there is integrated tax. It has been replaced by integrated tax under customs. So custom duty is on goods which are imported. When I import goods means what? From outside India I purchase goods, on that I have to pay custom duty. So earlier CVD and special CVD was required to be paid, which is replaced by integrated tax now. Then CST, that is central sales tax, and surcharges and cess in so far as they relate to supply of goods and services. So now here this, if there were any multiple surcharges, they were again brought under GST. State levies. Okay, now does that mean that central excise duty, then central sales tax acts are now completely deleted? No, there are some products on which these duties are there. So they are not completely subsumed. They are subsumed but not completely subsumed. Then state levies. State surcharges and cess in so far as they relate to supply of goods and services. Entertainment tax. Now here comes the important point. Entertainment tax. There were two types. So if you go to any this multiplex or theater to watch movies, you can see the ticket. On that there is entertainment tax given. So here it is given entertainment tax is subsumed, which means only GST. But read what is given in the bracket, except those levied by local bodies. So entertainment tax only, so there were two entertainment taxes earlier. One which was levied by the state government, and second which was levied by the local authority. Local authority means your municipality, municipal corporation. So now see, GST will be shared between whom? State government and central government. Now we have three layers structured in India. We have central government, state government, and under state government we have local authority. Like for big cities, Pune, Mumbai, Hyderabad, Chennai, then Cochin and all, there is municipal corporation. This is for bigger cities. Then for some tier 2 cities you will have municipality. Then you have Jilla Parishad for taluka level and Gram Panchayat, like that. Then some places you have local bodies. Does that mean that under municipality, municipal corporation, there is municipality? And no, municipal corporation is for that town. Then besides that town, if there is village, then there is Gram Panchayat. If there is a taluka, then there is Jilla Parishad. So even if there is three-layered structure, GST won't be shared. So all these are called as local authorities. Are they going to share with local authorities? No, they are not going to share with local authorities. So in that case, local authority said, "Are hamara revenue, that entertainment tax is my income. Why it should go to GST? If it has to go to GST, give me some part of GST." So central and state government said, "No, no, let it be." So the entertainment tax which was collected by state government, that is under GST now. That is no longer required. But entertainment tax collected by local authorities, local bodies, still remains. So the next time you go to a multiplex or theater, you check your ticket. On that it is given entry tax charges, entertainment tax and GST. So that entertainment tax will go to which government? It will go to the local authority. GST will go to which government? Half will go to central government, half will go to state government. So entertainment tax other than levied by local bodies. Then tax on lottery, betting, gambling. So state VAT department had this tax, separate tax. Now it has been brought under GST. Then entry tax, all forms, purchase tax, VAT, sales tax, luxury tax, and tax on advertisement. I explained you this. Luxury tax means for hotels it was there. So these state levies were subsumed. Then dual GST model. I think I explained you this. India has adopted dual GST, means half, both central and state government will get half of the taxes. Central will have tax to power intrastate sales, and states will be empowered to tax services. Earlier intra. Okay, now coming to this point. What is the difference between interstate and intrastate? So okay, I'll just ignore this first. Directly. So A has sold goods to B, or A has provided to B in Goa only. Means A is in Goa, B is in Goa, and service is also provided in Goa. So this is called as intra-sale within a state. And here A has provided goods or services to B. A is in Goa, B is in Maharashtra. So it is between two states. So it is called as interstate supply. I hope you are clear. Intrastate means within the same state. Interstate means two states. GST will extend to all of India. Then GST is destination based tax applicable on all transactions involving supply of goods and services for a consideration subject to exceptions thereof. So this I already explained that yes, here in first transaction revenue will go to GST will go to which government? Half GST will go to central government and half to Goa government, government of Goa. Goa is a state. What about second? Half will go to central government and half will go to which government? Government of Goa or government of Maharashtra? It will go to government of Maharashtra. Why? Because it is destination based tax. Means where is the destination of goods or services? It is in Maharashtra. So Maharashtra government will get that revenue. So earlier intrastate sales means within state. On that VAT was payable, which means state government had the power. Now central will also get the power, half, and services were taxed only by central government. Now state will also get. So that's we can say beauty of GST, that both the governments will share. Local authorities are not yet into GST. If local authorities come, obviously the GST rates will increase because again some additional tax will be there. And what is compensation? Compensation tax, why is it collected? Or compensation says state government feel that okay, if we come into GST we will face some revenue loss. So central government says okay, we will pay you that compensation for that. And how that compensation central government will pay? By collecting tax from us. Now tax is collected. Now why tax is collected by government? Because government has so many things to do. It has to maintain roads, infrastructure. Then major expense is the security. We are on two sides, we have two great countries, so we require our army, navy, air force to be continuously alert. Then for below poverty line people, rationing is also done, or sometimes free food is or food stuff is also given. So it government wants money for that. Then for purchase of defense equipments, so tax is collected for that. That's the basic idea of collecting tax. Cess is means if I pay GST, I won't say no, government should use this only for this purpose, only for building a health infrastructure. Now you have seen during pandemic, we had several issues relating to oxygen, medicines and all. So government has to purchase that also. So I cannot say that the government should purchase only that from my money, from whatever. So tax is, you cannot say anything, that government will decide how the tax will be spent. But in case of cess is collected for a specific purpose, which means compensation cess, why it will be collected? Only for giving compensation. It won't be used for purchasing hospital equipments. No. Likewise in income tax we have health and education cess. that health and education cess, whatever is collected on income tax, that will be used only for funding health and education related activities. So cess is a tax for specific purpose. If you want, you can write cess is a tax for specific purpose. Okay. Then now at first we first discussed that there were there was this Constitution 101st Amendment Act. So due to that 101st Amendment Act, what was done? The what exactly is okay? Okay, ठीक है. Yeah, due to that Amendment Act, Constitution was amended, but you just cannot amend the Constitution. It has to be made Act also. So four major types of or five major types of acts were passed. CGST Act, that is Central Goods and Service Tax Act. SGST Act, that is State Goods and Service Tax Act. That is passed by each state government. Then Union Territory. For now, we have Union Territories in India. We'll come to that. What are Union Territories? So for that, Union Territories Goods and Service Tax Act was passed, and IGST Act, which is Integrated Goods and Service Tax Act. And then you have Compensation Act separately. In our syllabus, we don't have Compensation Act to study, so we have to study only these four. Out of that, specific state government related SGST Act need not be studied. UTGST Act is just a copy paste of CGST Act. Integrated IGST Act, what they have done, they have given few sections which we are going to study. Some 15-20 sections are there, and then there is one section which says that the procedural formalities like registration, payment for IG, etc. for IGST Act will be similar to CGST. So the main focus we are going to study is CGST Act. So what are the four types of acts? CGST Act, that is Central Goods and Service Tax Act. Second is SGST Act, State Goods and Service Tax Act. UTGST Act, that is Union Territories Goods and Service Tax Act. And IGST is Integrated Goods and Service Tax Act. Now you will say that why we are having different acts. For that we need to find out that what exactly is India. In India we have, this is a one country, but in India we have states and union territories. Okay, so how many states are there? There are 28 states. There was one state, but Jammu and Kashmir now is no longer a state. Now it has been divided, it is bifurcated into two union territories. Union territory of Jammu and Kashmir and union territory of Ladakh. So what are these union territories? Generally these union territories, they don't have their government. Like every state has a government. Union territories don't have government, but they have this governor appointed by union by the union government. So let's check up. There are two types of union territories. Some union territories are like states, and some are like only union territory. Applicability: India is a summation of three categories of territories, states. For every state there is a legislature. They will be governed by SGST Act. Like states, which are the different states? Maharashtra, Goa, Karnataka, Andhra Pradesh, Tamil Nadu, Bihar, then Kerala. These are all states. Every state has a state government. Every state has a chief minister. Then second, union territories with legislature. Okay, first I'll read C point. Union territories without legislature. Union territories of Andaman and Nicobar Islands. So this is first. Lakshadweep, Andaman and Nicobar Island, assuming that this is India. So on this side we have a set of islands, that is Andaman and Nicobar Islands. Then on this side we have Lakshadweep, that is second union territory. Third, Dadra and Nagar Haveli, Daman and Diu. Now somewhere here in Gujarat you have this Dadra. Inside Gujarat there is Dadra and Nagar Haveli, Daman and Diu. Earlier Dadra and Nagar Haveli was a separate union territory. Daman and Diu was a separate union territory. Last year they have, or not exactly last year, they have recently they have merged it. They have merged it and they have made it one. So two union territories were merged together. One state was bifurcated into two union territories, Jammu and Kashmir and Ladakh. Two union territories were combined in one union territory. So there is only one union territory now, Dadra and Nagar Haveli, Daman and Diu. So this is third. Then Chandigarh and Ladakh. Now speciality of Chandigarh is like it's very funny. It's a union territory plus it is a capital state. State capital. It's a state capital of two states, Punjab and Haryana. But still it is considered as a union territory. And Ladakh shall be administered by president through an administrator appointed by him. So on this, there not governor, there will be an administrator. There won't be any state government. There won't be any chief minister of Daman and Diu or Andaman and Nicobar Island. No. Central government will appoint a person called as administrator, and he will do the administration work. They will be governed by UT-GST Act. So if a transaction takes place, intra-union territory transaction takes place in these, then in that case, which tax will be levied? UT-GST plus CGST. So if a transaction takes place in union territories without legislature, it will be CGST. CGST is there plus UT-GST. Now there are three union territories. Union territory of Delhi, Puducherry and Jammu and Kashmir. Okay, just coming to here, union territories without legislature, you don't have state elections in these. In Dadra and Nagar Haveli, Chandigarh, Ladakh, state elections are not there. Obviously, when central elections are there, there will be elections here also. But state elections are not there. There is no CM. But in these three, Delhi, Puducherry and Jammu and Kashmir, this is union territory with legislature, so state elections will be there. We know there is a chief minister to Delhi, Shri Arvind Kejriwal. Puducherry also has a chief minister. So these are like, these three union territories, are they full states? No, they are not having powers of full state. For example, the power of a state is, the police is under state government. So you can, if you travel to different parts of the country, you can see police wearing different uniforms. So the police which are wearing uniform in Maharashtra, that uniform will be separate. You will say why? But they are part of India only. No, they are under state governments. So these three union territories with legislature, even if they have similar powers like state, most major powers are not there to these governments or to these whatever governments are elected. Like state police of Delhi police is not under Arvind Kejriwal. They are under central government. So these are having legislature, but major powers are not there. Some powers are there. You can obviously, since there are elections and you are elected in Delhi, you have some powers, but not fully state. That's why this Aam Aadmi Party says that we want full statehoodship for Delhi. Why? Because union territories with legislature do not have full powers. So they want full powers for Delhi. So now, even if they are union territory with legislature, even if they are union territory, they have some powers, not full powers of state, some powers. So they are going to pass their SGST Act. Now if that transaction takes place in Delhi, within Delhi, then which tax will be charged? CGST plus SGST. And if the transaction takes place in states, which tax will be charged? CGST plus SGST. Then when is UT-GST charged? If the transaction takes place within the state, within the union territory of Andaman and Nicobar Islands, Lakshadweep, Dadra and Nagar Haveli, Daman and Diu, Chandigarh and Ladakh. So I'll just go back. So CGST Act is levied and collected by central government. SGST Act is, where is it? Levied and collected by state governments and union territories with legislature, which covers three of them. So which are the three of them? First is Delhi, Puducherry means Pondicherry, but on paper name in our this government records is Puducherry. French, it was a French settlement there. So French people called it Pondicherry. So for tourism, if I want to post on Facebook or my Instagram that yes, I have visited Pondicherry, I won't be writing Puducherry. I will be writing Pondicherry because there the tags will be Pondicherry only, geographical tags. But actually it is Puducherry. So you should use the word Puducherry in exam and obviously in day-to-day use also if you want to use that. So Puducherry, then and last one is Jammu and Kashmir. Then in that, if that transaction takes place in that, then in that case we are going to charge which tax? SGST and CGST. If it is union territory without legislation, then intrastate supplies UTGST will be charged plus CGST. Then you will say, what is this IGST? If the transaction takes place interstate, what is interstate? Between two states, one state or one union territory, or one union, two union territories. Then in that case, it is interstate or inter-union territory. Then in that case, IGST will be charged. Interstate supplies of taxable goods and or services will be subject to integrated goods and service tax IGST. IGST will apply approximately be sum total of CGST and SGST, UTGST and will be levied by central on all interstate supplies. So if 18% is the tax rate and they say that the transaction is intrastate, means within Maharashtra, then 9% will be CGST, 9% will be SGST. If it is interstate, then entire 18% will be IGST. Got it? We'll just quickly summarize this. So place of supply means where the supply is done. If it is in states, if it is in Delhi, Puducherry, Jammu and Kashmir. Then Andaman and Nicobar Islands, Lakshadweep, Dadra and Nagar Haveli, Daman and Diu, Chandigarh or Ladakh. Means it's not in, they should be in same state or same union territory. So if it is in states, then which tax will be levied? Total tax rate is 18%. Then either, sorry, not either, 9% CGST plus 9% SGST. So in exam, sometimes they will give GST rate 18%. Then you have to find out whether it is interstate or intrastate. If it is intrastate, means within one state, then you should not charge directly 18%. 9% CGST, 9% SGST. CGST 9% and SGST 9%. If it is in Delhi or Puducherry, then CGST 9%, SGST 9%. And if the transaction is either in Andaman and Nicobar Islands, Lakshadweep, Dadra and Nagar Haveli, Daman Diu, Chandigarh and Ladakh, then CGST 9% and UTGST 9%. What if the transaction takes place, buyer is in Daman and Diu and seller is in Dadra and Nagar Haveli, then they are in one union territory only. Then in that case CGST and UTGST will be there. Now Jammu and Kashmir and Ladakh are separated. So if the transaction takes place from Jammu and Kashmir to Ladakh, it is two separate union territories. Then in that case IGST will be levied. So write down. In case of interstate or inter-union territory supply, IGST 18%. Got it? Okay. So see this for CGST, the act which is governing is CGST Act 2017. For SGST we have SGST Act. SGST Act is passed by whom? All the 28 states plus Union Territory of Delhi, Puducherry and Jammu and Kashmir. Then Union Territories, all the 5 Union Territories, there are no separate Union Territory acts. Since they are managed by central government, there is only one act, UTGST Act 2017. And for charging the tax on interstate supplies, we have IGST Act 2017. Got it? Okay, so see this summary. Location of supplier and place of supply in same state or union territory, CGST plus SGST plus UTGST. CGST plus SGST or UTGST. Then if it is in two different states or two different union territories or a state and union territory, then IGST will be charged and rate will be equal to CGST plus SGST or CGST plus UTGST. Got it?